The stock market is so concentrated this time that the majority of the revenue is coming from just 7 companies in the stock market. Yes, I'm talking about the magnificent 7 companies that are responsible to generate almost 31% of the revenue coming from the entire US stock market. And in 2024, these 7 companies were actually producing pretty much 49% of the overall gains out of S&P 500. So let's take a look at this chart. You can see that since 2000, the dot-com bubble, when these companies were actually launched, some of the companies did not even exist in dot-com bubble era. Microsoft is the only company that was present in 2000 as well as today as part of the Magnificent Seven portfolio. So you can see the trajectory since 2000, and these companies were growing at a very decent rate. But something changed in 2012 when the Google was launched and its valuation was about $63 billion. And since then, these companies have exploded in terms of the growth. And today, these companies consist of a market cap of $15.4 trillion. Yes, trillion with a T. That gives you a 25% compounded average growth rate since 2012. That is an insane amount of growth. Okay, this is compounded 25% annual growth. And the entire stock market only grew by 2.4 times in the same period, versus these companies have grown 13.5 times since 2012 in the same period. That is a massive growth explosion coming from these 7 companies, which has never been seen in the stock market history. A lot of people compare today's Magnificent Seven with 2000 because we had similar exponential growth back in dot-com bubble era when Cisco and Intel literally ran that rally. If you compare today's Mag 7 with the Mag 7 of 2000, you can see Microsoft is the only company that was part of the Mag 7 back then and also today. Today, all of these companies are contributing towards 31.3% of total market cap compared to the entire US stock market. And their net profit margin at an aggregate level is around 28%. Compared to 2000, we can see the aggregate market cap of these 7 companies was around 19%. So today it has almost doubled, okay, from a total market cap perspective. And the net profit margin was also much lower, 16% compared to today, which is 28%. So definitely a massive growth difference what we see today in the Mag 7 compared to what we saw in 2000. So definitely these companies are producing much more growth and they have much bigger net profit margins compared to the Mag 7 in 2000. I'm not giving you any investment advice in this video, but I'm just giving you the enough information and knowledge that you can make your own decision about investing into these companies. A lot of people buy these stocks individually and keep them in their portfolio. Some people actually buy S&P 500 SPY index. But if you just want to invest into these Mag 7, there is an ETF that consists of these Mag 7 stocks. The ticker is MAGS, M-A-G-S. It is created by Roundhill, and of course it's an ETF, so they will charge some management fee around 0.39%. If you wanted to invest, you can also try that as an ETF, or you can purchase these stocks individually, or you can just buy SPY. It all depends upon your investment strategy. Not giving you any investment advice, just sharing with you how these companies have produced an exponential growth in the past 5 years. It may continue, who knows? Past performance is not a guarantee of the future performance, but there will be some other opportunities coming down the road because the AI explosion is something that we all are looking for. Anyway, you let me know what you think about that. Put your comments down below and check the links in the description because there is a lot of stuff available for you. If you haven't started investing yet, check the link for the Questrat, which is one of the best brokerages platform that I use in Canada. Very easy to use, very simple to use. I can use on my mobile as well as on my computer. You can click on the link to start investing right away and you can thank me later. If you like this video, give me a thumbs up and subscribe, and I'll see you in my next video. Take care. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later.